Hello everyone, my name is Abhijit Acharya CS. I am a practicing chartered accountant, and in today's session I will be dealing with a very important section which is known for September month in the Income Tax Act, that is section 44AB of Income Tax Act 1961, which is called Tax Audit, also called Compulsory Audit of the Books of Accounts by the SSC. First of all, I would like to narrate for which SSC this tax audit is applicable. Number one, I will categorize the applicability into three categories. Number one, specified professionals, who all are come under specified professions. Number one, chartered accountants, lawyers or advocates, doctors, certified architects, certified engineers, and etc. are falling under specified professionals. If those professionals' gross receipt, for example fees, charges, exceeds 50 lakhs in the previous year, that is 2021 and 22, that is from April 2021 till 31st March 2022, exceeds 50 lakh, then tax audit is applicable. Understood? Second category, specified businesses, those SSCs who are engaging in the business and trading and manufacturing. I will call those SSCs as business entities for the name sake. For them, tax audit applicability limit is 1 crore. That means turnover of those business manufacturing entities exceeds 1 crore in the previous year, that is 21-22, tax audit is applicable. But there is one amendment in the Finance Act 2021 which says that the limit should be enhanced from 1 crore to 10 crore if both the following conditions are satisfied. Number one, cash receipt of those business entities is less than total receipt of those business entities, and please remember the word used in the provision is and, not or, and cash payments of the business entities is less than 5% of the total payments made by the business entities. Remember, both the conditions should satisfy. Then tax audit applicability, tax audit limit is 10 crore. If any of these two conditions are not fulfilled, then limit is 1 crore. Please remember that. In your examination also, examiner will try to confuse you. But remember, both the conditions should satisfy. These are the two categories for which tax audit is applicable. Number third category. These are all the specified cases. For example, section 44AB, 44AD, 44ADA, 44BB, 44AE, 44BBB. I will be dealing with these sections in upcoming videos. If these SSCs for which these sections are applicable are declaring income which is lower than the income that should have been included, that should have been declared as per these sections, then tax audit is applicable. Similarly, these assessees total net total income is greater than basic exemption limit, that is 2.5 lakh, then also tax audit is applicable. Understood? These are the main three categories for which tax audit is applicable. Then penalty or sir, when this tax audit report should be filed, there are three forms, that is 3CA, 3CB and 3CD. We should be certified by the chartered accountant on the approval of the SSC and should be filed as per the provision. It strictly says before 1 month before filing the income tax return. Filing of income tax return is mentioned under section 139(1), 139 subsection 1. As per section 139 subsection 1, it clearly says the due date is 31st October unless otherwise it has been postponed. 1 month before means 30th September. This is the month. You have to submit tax audit report, that is 3CA, 3CB, 3CD. Okay. Then, sir, what if I am not filing the tax audit reports within this date or not at all filing the tax audit report? What will be the penalty? What will be the consequences? It clearly says under section 271B of the Income Tax Act 1961, it clearly says the penalty will be 0.5% of the turnover or gross receipt, as the case may be. Turnover for business, gross receipts for professionals, or 1.5 lakh, whichever is lower. This is the penalty. Okay. Then this is the case. Actually, the provision is very simple. To conclude, I am considering the following 2 points as a very much important. You may be having one doubt. Sir, how to calculate cash receipt and cash payments? That rate, that percentage of cash receipt to the total payments, cash receipt to the total receipts, and cash payments to the total payments in a practical situations. Go to balance sheet. Cash and cash equivalents will be there. Only for cash, go for only for cash. I'm just narrating an example. If the cash receipt, total cash receipt from April to March, please add those figures. Keep it as a. And for computing total receipt, add cash receipt plus bank receipt, the amount which is debited to the bank account. Understood? Bank receipt directly accounted to your bank. Add that also. Cash receipt plus bank receipt is equal to total receipt. This should be considered as B. The A divided by B. A is cash receipt divided by B, that is total receipt. If it is less than 5%, tax audit applicability, tax audit limit is 10 crore, not 1 crore. Understood? This is very simple. The second most important thing, which in our office and in day-to-day life also it may arise. Sir, whether GST amount is also should be included in the turnover part? because in our office one client of whom the turnover is 98 lakh, which is a business entity for which cash receipt and cash payments are not applicable, and which is more than 5% of the total receipts and total payments accordingly. For them 1 crore is the limit, no? Understood? Are you understanding, no? Okay. For them, for this SSE, the turnover, as already said, is 98 lakh. GST portion is 5 lakh. If you add turnover without GST and plus GST, it crosses 1 crore. Tax audit is applicable. If you don't add 5 lakh, that is GST portion, tax audit applicability is not applicable. There will be not tax audit applicability, no, because it is less than 1 crore. Understood? This is the conflict, whether tax audit is applicable or not. The SSE is the client is, that is, client is having one doubt. But our Income Tax Act is a God, which clearly says under section 145A, it says that GST portion also should be included in the turnover part, and hence tax authority is applicable. Understood? The client is happy because he doesn't have that much of knowledge before, but our Income Tax Act, our God, clearly says GST portion should also should be included in the turnover part. Turnover should include GST. 98 plus 5, that is 1.3 lakh, 1.3 crore, for which tax audit is applicable. So these two major things I consider as a most important point while performing tax audit and 44AB. And this is the today's sessions of 44AB. If you are happy with this video, please like, share and subscribe to my channel. If you do these three things, it will be an encouragement moment for me to upload more videos and to encourage you and to enhance and to share my knowledge with you in upcoming videos. And see you in the next upcoming videos. Thank you. Jai Hind, Jai Vande Mataram.